right, hello everybody. Welcome to today's webinar, How to Master Moving Averages. I'm Jerry D'Ambrosio. I'm the Manager of Educational Content here with VectorVest. Glad to be with you folks today. Glad you guys are able to join us. I do want to welcome everybody joining us via YouTube as well. So we have two groups of people, those that are joining us via GoToWebinar and YouTube as well. So welcome everybody. I do want to do a quick sound check before I officially really kick things off, just to make sure that you guys can see my screen and that you can hear me okay. Those of you joining us via GoToMeeting, which I can see the chat box, if you guys don't mind, just let me know that you can see me, see my screen and hear me by using the chat feature, which I'm about to show you here, and let me know that you can hear me okay. Okay, looks like I was muted, so welcome everybody. I just want to do a quick sound check before I officially kick things off. There we go. Elmer says now hearing you well from South Chase, Florida. Awesome. So welcome to today's webinar, How to Master Moving Averages. I'm Jerry D'Ambrosio. Glad to be with you guys today. I want to welcome everybody joining us via YouTube. I've already done that a few minutes ago. So now this is the question box, so if you are joining us via GoToWebinar and you want to ask a question, by the way, let me go back real quick. I do have with me today Mr. Stan Heller. Stan is our VectorVest Canada consultant. Those of you that live in Canada know Stan very well. He will be in the background answering any questions that you have. Speaking of questions, if you do have a question for either myself or Stan, those of you that are using the GoToWebinar application, just enter a question for us, click on send. If you can't see that control panel, just click on the orange arrow that will allow the control panel to expand. Also, if you lose sound or video, just please log out and then log back in. That generally helps the situation, but it does look like everybody can hear me. And I always say this, I say, if one person can hear me, that means everybody should be able to hear me. Whether you do or don't has to do then with kind of locally on your machine, whether you have your speakers turned on or the sound turned up, whatever the case may be. But if I am coming through to one person, that means that sound is good on our end, and it's just a matter of either logging out for you guys or turning up your speakers, like I said. All right, so before I officially kick things off, I want to let you guys know that we're going to be together for about an hour. This session is being recorded, and you guys will get this recording sometime later this afternoon, maybe early this evening. But I do want you guys to stick with me to the end. If you stick with me to the end, I will give you a copy of today's slides. I think that will really help because there is a lot of content that we're going to cover here today, and I think the slides will help, particularly after we finish and after you review the recording, so that you can kind of understand and review everything that was covered here today. Okay? What we are going to cover here today are some key concepts here. Moving averages remove the noise and define the trend to help us predict if the stock will continue to move up or down. I always hesitate using that word, predict. We are anticipating the likely direction that the stock will continue to move in, okay, whether it's again up or down, okay. I love moving averages. What we're going to cover today in today's webinar are 5 key ways to use moving averages, and then what we're going to talk about is the EMA Squeeze swing trading strategy. This is a fantastic trading technique using multiple moving averages, and it's a complete trading system. What we mean by that is it helps us identify when we should be buying, what stocks we should be buying, and when we should exit those positions. Okay, so it's a complete trading system. There's no worrying about when should I get in, where's my confirmation level, if I do enter the trade, where do I get out? There's none of that. Everything is built in here, so it is a complete trading system using multiple moving averages. Okay, So why are moving averages so important? They provide a simple means of smoothing price action, making the trend and momentum more discernible. Without moving averages, if you're just looking at price, a lot of times it's a little difficult to really identify true direction. I mean, that's what moving averages are for. Okay? They help us identify true direction, smooth out price action. Sometimes it's a little difficult with the naked eye to identify true momentum, true direction, simply by looking at price. Not only are moving averages a powerful technical tool on their own, but they also form the basis for other technical indicators such as Bollinger Bands, stochastics, and MACD. All of those indicators really center around certain moving averages. Professional traders have built entire trading systems around moving averages. Okay? So here are some key concepts. Right at the top, the header there says MA or EMA, meaning a simple moving average or an exponential moving average. Which one should you use? Traders with a short-term perspective, like swing traders. So what we mean by short-term perspective is, your desired holding period is anywhere from days to weeks. Okay? An investor or a position trader, their desired holding period is weeks to months, if not longer. So we're really going to focus today on swing trading, especially with the EMA Squeeze swing trading technique. But if you're a trader with a shorter term perspective, you tend to prefer exponential moving averages, EMAs, over simple moving averages, because EMAs move closer to price, so there is less lag. But let me say this. There is always going to be a lag. Moving averages are lagging indicators. They're not leading indicators, okay? So no matter which moving average you use, simple, exponential, or weighted, there's always going to be a lag. But with exponential moving averages, they move closer to price because the more recent price data is more weighted than the older price data. With a simple moving average, every price point, every data point is weighed equally. So if you have, let's say, a 10-day simple moving average, every price point within the last 10 days is weighted the same. With an EMA, the more recent price data holds more weight in that average, therefore it's going to hug or move closer to price. It's important for traders, right? Because of the quickness that that a trader wants to be in and out of trades. So as you can see here, the red moving average, we're just looking at stock, it doesn't matter the symbol. The red moving average is a 13-day simple moving average, and the green line is a 13-day exponential moving average. And you can see that the EMA hugs price a little bit more closely than the simple moving average. It's more reactive to price changes and changes in direction than a simple moving average. You can clearly see that when the stock here kind of bottomed out and started to rally, the EMA began or reacted a lot faster than the simple moving average did, right? The simple moving average didn't begin to turn the corner until this area here, while the EMA began, a little bit closer to the pivot, a little bit closer to the direction change. Okay? So here are some key concepts. 5 key ways to use moving averages. Number 1, define and invest with the trend, whether it be up or down. So we want to determine how strong the trend is. Number 2, they help us identify buy and sell signals. So it helps to know when is the safest time to buy and when to consider selling. Number 3, determine broad market conditions. Is there more buying pressure or selling pressure? Okay. Is the market healthy and in an uptrend, or is it in a downtrend? And how strong is that trend? Is the stock near support or resistance? Okay, Robert's asking why 13 days. That's just an example, Robert. That was just an example. 13 days is a very popular EMA, but just that's previous slide. That's just an example to show the difference between a EMA and a moving average. The same period, the same look back period, the difference between EMAs and moving averages. Okay, so is the stock near support or resistance? See if your stock is finding support in an uptrend or meeting resistance. So moving averages, a lot of times they serve as support or resistance. Certain stocks react differently to certain moving averages. Okay. And then finally, is price extended? Determine if price is overextended and far away from its mean average. So a moving average it's an average, right? So if we go back to middle school math, right? If we understand about averages, the further something moves away from its average, the more likely it is to revert back to it. So for example, if price, let's say, is just skyrocketing and it's almost parabolic and it's pulling further and further away from really all of its moving averages, right? A 20-day EMA, a 50-day moving average, the more likely it is to revert back to it. So it really helps us to determine better entry points as opposed to chasing stocks that we don't want to miss out on opportunities. Okay, understand the likelihood and the probability of a reversion back to that moving average. Okay, so again, doesn't matter the stock, we're looking at a lot of different moving averages here. Okay, so we want to define and invest with the trend. So the green line is a 3-day EMA that represents the short-term trend, as does the 8-day EMA, which is the red line. Okay, medium short-term trend is a 20-day EMA or a 20-day simple moving average as well. Okay, but that is looks like it's a brown line or more of a maroon line here. That's a 20-day simple moving average, and that represents the medium short-term trend of the stock. Now when you get into you start to expand the look back period. The blue line is the 50-day moving average, and that represents institutional support or resistance. Okay, the 100-day moving average, that's a simple moving average. If it just says MA, by the way, it's just a simple moving average. If it says EMA, obviously that's an exponential. So the intermediate long-term trend is the 100-day moving average, and the institutional long-term trend is the 200-day moving average. Institutional ownership really only occurs above the 200-day moving average. Now, institutional buying may occur as price pulls back towards the 50-day moving average, settles above it or at it, and then retraces from it, establishing a support level using that 50-day moving average. Okay, so we want to define and invest with the trend. 200-day moving average is the institutional long. The 100-day average, simple moving average, is the intermediate long-term trend. Okay, we want to live above those moving averages. Okay, we want to identify buying opportunities for the most part. Now, don't get me wrong. When you're going bottom fishing, which is an entirely different animal, you may be buying stocks that are below the 200-day moving average. For the most part, we want to live above the 200-day moving average and the 100-day moving average, meaning we want to find opportunities to buy. We want to pinpoint entries using these other shorter term moving averages or intermediate term moving averages. We want to use those moving averages to identify buying opportunities while above the 100 and the 200-day moving averages. Okay, we want, I don't know if you guys have ever taken our Trade Like a Pro course. Okay, a lot of the techniques that we teach in that Trade Like a Pro course center around stocks that are in long-term uptrends but are pulling back. Okay, that's what the pros really have figured out in terms of high probability successful trades. Live above the intermediate and longer term moving averages and try to find buying opportunities using different techniques. Now, those pros use in the Trade Like a Pro course different technical indicators. Some use moving averages as well. But what I want you guys to understand is, your probability of a successful trade goes up when you favor stocks that are in longer term uptrends but might be experiencing short or intermediate term corrections. And these other moving averages will help identify buying opportunities while in a longer term uptrend. Now, the opposite goes for shorting stocks. This is a good example too. So I said that for the most part, we want to live above the 100-day and the 200-day moving average. Let's take a look at this. Doesn't matter the stock, it's FNHC. All 1, 2, 3, 4, 5 of the other moving averages are below the 200-day moving average, right? So that means that price is below the 200-day moving average. Look at these rallies. I know we don't have price on here, but the rallies within an underlying downtrend are short-lived, aren't they? So if you try to, mess around with buying using shorter-term moving average crossovers within an underlying downtrend, does that increase your probability of a successful trade? It does not. Okay, let me go back. So here in an underlying uptrend, right, if we follow the shorter term moving averages, if we make sure that price is above the intermediate and the longer term moving averages, but we look at the rallies that occur in an underlying uptrend, they're much longer than the pullbacks. It's the complete opposite in a downtrending environment, right? In an underlying downtrend. Rallies are shorter lived, pullbacks or down moves are much longer. So let's play the game where we want to focus on stocks that are in some, whether it be an intermediate or a longer term uptrend. But look, we're traders, right? I want to buy dips. I want to get the best price possible. I don't mind momentum trades from time to time. I really don't. But I want to get in as early as possible because, again, the holding period is generally a lot shorter. Okay? So that's just some basic concepts on how to use moving averages. Let's talk about a trading technique now. It's called the EMA Squeeze. It's a multiple moving average trading system. It uses a 5-day, an 8-day, and a 13-day exponential moving average. So it says after a pullback or a quiet period where the three moving averages have, quote, squeezed together, they start to pull apart and fan out, trending upward. Okay? Using the slope of the three moving averages after a squeeze, we can predict if a significant trend change is underway and whether it is likely to continue. A strong upward move increases the probability of a successful trade. And we are going to go through some charts. I'm going to hop into the VectorVest program in a little bit. But let's talk about the buy rules. What we always like to do is lay it out on paper and then look at some graphs. Okay, so here it is on paper. Our buy rules are the 5-day EMA has to be greater than the 8-day EMA, and the 8-day EMA has to be greater than the 13-day EMA. Price also has to be above the 50-day simple moving average. What does that mean? Remember, we just looked at a few charts ago. 50-day moving average, simple moving average is institutional support and resistance, and it represents the intermediate term moving average. Well, if price is above the 50-day moving average and the 5-day EMA is above the 8-day EMA and the 8 is above the 13, okay, what does that mean? That means that price is also above the 100-day moving average and the 200-day moving average, right? And we want to favor those types of stocks. Also, number 3, RT, relative timing, very important indicator in this trading system. RT is trending higher over a minimum of a 3-day period, meaning we want RT as of our entry to be higher than it was 3 days ago. Okay? We want the market to be in an uptrend. Okay? And we're going to use the DEW signal to determine whether the market is in an uptrend or not. So we're only going to focus on buying stocks when the DEW signal, that's our market timing signal, kind of our middle of the road market timing signal, that has to be up. And the sell rule, the line in the sand, is we're going to close the position when the 5-day EMA closes below both the 8-day EMA and the 13-day EMA. You may find an opportunity to sell sooner, but that right there, when the 5-day EMA closes below both the 8 and the 13-day EMAs, that is your last line in the sand. All right? So here's a small little chart example. So here where the arrow is pointing, the 3-day EMA, I'm sorry, the 5-day EMA is in green, the 8-day EMA is in red, the 13-day EMA is in blue. So the quiet period that we just spoke about is this area here, this kind of the capitulation area here after a downtrend. Stock capitulates for a little bit. You can see the EMA, there's the squeeze, right? There's the squeeze. The EMAs start to squeeze together, and then when price actually begins to move higher, that's when the bands or the EMAs pull apart. That's when they begin to pull apart. Okay, so this area here with you got the blue dotted lines, that's that quiet period. Okay, the stock begins to rally. Oh, by the way, the pink line is the 50-day simple moving average. So our entry, follow my mouse here, our entry is that day right there. Price the day before closed above the 50-day moving average, right? Remember, that's a prerequisite. Price has to be above the 50-day moving average before we even consider taking the trade. So we begin to see the bands or the moving averages pull apart while price is below the 50-day moving average. Price closes above the 50-day moving average on that day. Follow through is achieved the next day. There's our earliest entry. Our earliest entry. And as of that day, you could see the bands pull apart. Now, the bands or the moving averages don't have to be above the 50-day moving average. Price does. Okay? Same stock, and look at the RT indicator. We applied that indicator now at the bottom. It's the same stock. Our entry is here. And we want to make sure, though, that relative timing is rising, and specifically higher the day that we consider entering the trade, at least the first day where price closes above the 50-day moving average, that RT that day has to be higher than it was 3 days ago. Okay, so that's our buy rules. Again, we're going to look at a lot of charts in a moment. The sell rules, and this is for more of a prudent type of exit. We're going to look for the 5-day EMA to close below both the 8-day EMA and the 13-day EMA, and that happened here. Remember, the green line is the 5-day EMA, and it closed right in this area here. And what I love about this is, guys, you don't need price on. If you're truly going to follow the sell rule as we have it laid out here, you don't need price on the chart. You will of course have it on the chart, right? But its price is not involved here in helping us determine when to exit the trade. Okay, Pradeep says, what is RT? Pradeep might not be a VectorVest subscriber. Good question. Relative timing, RT stands for relative timing. It's a proprietary VectorVest indicator that identifies the short-term price trend and momentum of an individual stock. It's on a 0 to 2 scale. Above 1 is good, below 1 is bad. So that's what relative timing is. So the prudent exit is when the 5-day EMA closes below both the 8 and the 13. That happened here. Notice we don't have price on because it doesn't matter. Obviously, price has been falling. Okay, but that's your last line in the sand. Let's talk about some early warning signals. Okay, warning here, number one, is the gap in the bands is widening. The 5-day EMA is extended, really extended from the 50-day moving average. The further the moving averages start to fan apart, okay, what does that mean? What does that mean price is doing? Price is really running, okay? Really running, pulling further and further away from all three moving averages, and including the 50-day moving average. Okay? Now, if you start to see price running, but the relative timing indicator is diverging away from price's direction, meaning if price is rising, but the relative timing indicator is beginning to fall, that's a classic bearish divergence. Okay? That is I think that's your first early warning signal. If you've got a nice sizable gain on the trade and you feel that you're okay with exiting, even though you still feel that price is in an uptrend, and it is still in an uptrend, this by no means represents a downtrend. When you see a divergence like this, it by no means represents that the stock is now downtrending. It means that the uptrend is weakening. If you recognize a weakening uptrend and you have a sizable gain on the trade and you want to take it off the table, I don't blame you. Okay? So that's your first early warning signal, along with the gap in the bands. Now another warning signal, before the 5 closes below both the 8 and the 13, is the 5 and the 8 squeezing together. Okay, price is obviously pulling back off of a high, and price is the 5 and the 8-day EMAs are squeezing together. That is another early warning signal, and if you want to take the trade off the table, then you can. Last line in the sand is the 5 closing below both the 8 and the 13. So you have opportunities, and I said this earlier, you have opportunities to sell before the 5 closes below both the 8 and the 13. If you don't want to take those and you want to stay in the trade a little longer, there's your last line in the sand. Okay? All right, so we have both Canadian residents and U.S. residents, probably along with a lot of other folks from other countries as well. But we're going to be looking at Canadian stock examples and U.S. stock examples here. So here, whoops, is what we're talking about. Okay, all three moving averages sloping downward below the 50-day moving average. Downtrend, right? Then you get your capitulation, you get your squeeze of the three moving averages. They all essentially touch each other in the same area, and then as price begins to run up towards the 50-day moving average, they begin to fan apart. Okay? During that period, we want to make sure that the relative timing indicator is rising as well. Okay, so our entry was here. Our entry was in this area here. We're going to look more closely at some individual stocks and put price on. And you really only need price to I guess, pinpoint the entry. The setup, guys, can be observed without using price, without applying price to the chart. Because price is really going to come into play only when we need to see price close above the 50-day moving average, and then we need to see follow through the next day. But your setup here, your recognition of the fanning of the three moving averages, the relative timing indicator moving higher, okay, is what's important. The purple line is a 50-day simple moving average. So when price closes above the 50-day simple moving average, and at the same time you see the three shorter term EMAs fanning apart, there's your setup, there's your trade. You wait for follow through the next day. So we enter the trade and we run it, we ride it. We ride it, we ride it, we ride it. And only here in July of last year did the 5-period moving average close below both the 8, and the 13. There was your last opportunity to exit. Okay? There were other opportunities. So notice in this area here, when the 5 squeezed tighter and tighter towards that 8-day EMA. It happened again here. kind of happened in this area here as well. So there were other opportunities, and this is best case scenario, guys. This is a 50% gainer, all right? If you're okay with so that's a 50% gainer. Halfway is 25. This area here, you're looking at a 20% gain. This area here, you might be looking at a 15% gain. If that's your goal, if you're looking at 15 to 20% gainers every single trade, then you would have exited a little earlier. If there are other trades that you want to stay in a little longer, you allow those moving averages to exit you out of the position, meaning you close the position when the 5 closes both below both the 8 and the 13. Notice what was happening too in this area. Okay, look at the relative timing indicator. Price is still rising, okay, but the relative timing indicator is falling. It's hitting lower highs and lower lows. Once you understand relative timing and really get it, you will recognize that this is not a strengthening uptrend. It's in fact a weakening uptrend. RT is a very dynamic indicator that not only identifies trend, but strength of trend as well, or momentum as well. Okay? So here's Trulieve, cannabis company. Now this is on the Canadian exchange, but it's also traded on the U.S. exchange as well. So here's our here's our buying point. Okay, on July 13, 2020, $20.15. Now in this case, the squeeze occurred, guys, above the 50-day moving average. It can happen that way. Price, your entry can occur after a squeeze above the 50-day moving average. Now I know the example that we showed earlier, that wasn't the case. The squeeze occurred below the 50-day moving average. Here we see the band, oh my gosh, I'll keep hitting my mouse. We see the band squeezing together above the 50-day moving average and then start to fan apart. Price starts to rally and pull away from the 50-day moving average again, the 50, and you have your legend over on the right-hand side. The 50-day moving average is the pink line. Price running away, pulling away from the 50-day moving average. Okay. We don't have to wait for price to close above the 50-day moving average because it's already above it, right? Here's what's important as well. RT starting to pick up. RT is higher than it was 3 days ago, and incidentally, volume is starting to pick up as well, which is an added bonus. So there's our entry on 7/13 of 2020 at $20.15. Bands are pulling apart. Price is above the 50-day moving average. Relative timing is trending higher. There's our entry. Okay. The exit, the sell point was on August 27th of 2020. And we sell at roughly $26.71 for a 33% gain. Why? Because the 5-day EMA closed below both the 8 and the 13. So we exit the trade. Did we have another opportunity here right after we exited? Which sometimes it may happen. The answer is no. Can anybody tell me why, after we exited the trade and price ran for a couple of days, why wasn't that why don't I consider that a re-entry? Thank you, Walt. Awesome. No fanning. I mean, it's hard to see, but the 5-day EMA is barely above the 8. Okay, but there's no fanning. The answer, Walt had it, nailed it. No fanning. Relative timing was moving higher, but the fanning didn't occur. We really need to see that fanning. Remember, guys, what was the first thing that I said? Moving averages help us determine true direction, right? True direction. The steeper the slope of the moving averages, the stronger the trend. The wider the separation between the moving averages, the shorter the trend. That didn't happen here. So we're out of the trade. We stay out, we stay out, we stay out. All right, 5 goes below the 8, 8's below the 13. Now you're in a downtrend. Price crosses below the 50-day moving average, and here again is where you get that squeeze. Then price crosses above the 50-day moving average. Relative timing is trending higher, and here is where you get that fanning action. Yes, moving averages are lagging indicators, correct. Here's where you get the fanning action. Price closes above the 50-day moving average, and there's your entry the following day on October 8th, 2020. The bands pull apart and start to rise. There's the fan. Okay, and that resulted in almost a 49% gain there. The 5-day EMA never closed below the 8 and the 13, allowing you to stay in that trend longer. Okay, here's Sleep Number. This is a US market stock. So here the squeeze happened above the 50-day moving average again. Okay, some little consolidation here right above the 50-day moving average. Price begins to run, pulls away, the what is that, yellow, orange, whatever line, orange line. Price starts to pull away from the 50-day moving average. The bands start to pull apart. We buy at $48.15 at the beginning of October. We run this baby up for a 52% gain. Now look, oh, by the way, RT trending higher as well, right? That's important. There were opportunities to exit. You know, when the band squeezed here, you're looking at probably a 25% gain. That's about halfway. I wouldn't blame you if you took your gain off the table. Okay? The bands kind of squeezed in tighter and tighter here, but the 5 never closed below both the 8 and the 13, allowing you to stay in the trend longer. Louisiana Pack, LPX. This was a beast of a stock last year. I haven't really looked at it in a while, but I know it struggled quite a bit. I mean, lumber prices were through the roof last year, but they've fallen quite a bit, and this stock has struggled for sure. But here is the squeeze of the moving averages. The bands begin to separate. January 21st of this year. 81% gain after we enter. Okay, you may have considered selling here, but the 5-day EMA never closed below both the 8 and the 13. Second buying opportunity, either on a new position if you didn't take it here, or you could add to your position here. Now, why is this a second buying opportunity? Well, this was essentially another squeeze, right? 5, 8, 13 eventually touch. 5's above the 8 here, 8's above the 13. They start to converge towards each other. They squeeze together. Then the squeeze doesn't have to be a week or two long or squeeze, guys. The squeeze is just when the 5 and the 8 and the 13 essentially touch each other and begin to then separate. And here was another opportunity. Now, we don't have the arrow on the day before. We put the arrow here as your second buying opportunity because that's when we really started to see the separation of those 3 moving averages. Okay? This is a trend trading system. Okay? This is not necessarily it's not a reversal strategy, right? I mean, I don't think you really can't. Moving averages aren't reversal indicators. They're trend indicators. So if we're going to follow a trend trading system, let's make sure that the trend is truly emerging, truly moving in our direction. And it doesn't hurt to wait another day or so and make sure that those moving averages are fanning apart. Does that make sense to everybody? Walt is asking how much separation is enough. It's not a science. It's a visual recognition. Okay? It's a visual recognition. So if you're not comfortable or keen enough yet in recognizing it, then maybe you're someone who wants to wait another day and just to make sure that the separation is truly occurring. So it's not a science. It's not a percentage of a separation there. Okay, it's a visual recognition of the fanning of the moving averages. In a moment, I'm about to show you a search that is a part of these slides that will get you most of the way there. It will really find you opportunities without having to cherry pick and look at stock after stock. Okay, this is a very busy slide here, very busy slide. But let's look on. We're going to go from left to right. So here's a Canadian stock. Kinross Gold also trades in the U.S. Exchanges as well. There's your quiet period. I know it doesn't look very quiet, right? Price is pretty volatile during that period, but the moving averages are squeezing. Price begins to pull away from the 50-day moving average, and there's the separation. Okay, there's the separation between the moving averages. Relative timing, trending higher, hitting higher lows as well. Very important. That confirms that the momentum is truly changing. Price pulling away from the 50-day moving average. The separation between the three moving averages is occurring. There's your entry. It says a buy signal is triggered when the moving averages have squeezed together and changed direction after a quiet consolidation period. The fast EMA is above the medium EMA, and they both are above the slow EMA. Okay. Worst case, you exit when the 5-day EMA closes below both the 8 and the 13 for a 33% gain. There may have been an opportunity where you exited in this area here, when the 5 period squeezed together towards the 8. But again, last opportunity is when the 5 closes below both the 8 and the 13. Good exit there, right? 33% gain. You would have given back a lot more. Boy, you would have almost wiped out. If you would have kept that trade and ran it to here, look, I know price continued to run, but at the worst case, that's where price fell to. I mean, that's almost at entry. That's just a little bit above entry. So moving averages 5 below the 8 and the 13. Good opportunity to take your gains off the table at that point. Okay. Downtrend, short-term downtrend, right? Short-term downtrend. 5 below both the 8 and the 13. Why do I say short-term downtrend? Because price is remaining above that intermediate institutional support and resistance moving average of the 50. So intermediate term uptrend, short-term pullback, quiet period, capitulation here. Okay, above the 50. Price didn't fall below the 50 in this case, did it? Right? It stayed above the 50. You got your capitulation above the 50, the quiet period, the squeeze of the moving averages. Then price begins to rally again. Okay. Now, we really didn't see, look, in this case, guys, I wouldn't have minded waiting a couple of more days, okay, to make sure those moving averages were fanning apart. Nevertheless, you're getting in at a good opportunity. You're getting in, again, here's the reversal. It's not a reversal system. It's a trend change or a trend following system. Moving averages start to fan apart. Real nice gain there. There's your next leg. Sell signal is when the 5 period closes below both the 8 and the 13. Good opportunity to take your gain off the table there. Okay. So a couple of entries here with this one. This is WELL. Okay. Squeeze or quiet period above the 50-day moving average. Bands begin to separate. RT begins to trend higher. Volume begins to spike. There's your entry. I'm not sure. Actually, you know what? I am sure. The 5 never closed below both the 8 and the 13 here. So you could have stayed in the trade. Okay? You had another opportunity to buy more of it, or this might have been your first entry if you didn't take it back here. Okay? So there's your squeeze, there's your quiet period, little short-term pullback within an intermediate term uptrend. There's your price pulling away. There's the fanning. There's your re-entry. The 5 never closed below both the 8 and the 13 here either. You could have stayed in this trade the entire time, folks. Entering back here. Okay, RT is trending higher. Volume is starting to pick up a little bit above the average on a couple of those days. Okay, quiet period. EMAs are squeezing together. Begin to fan apart. Okay, so the setup is, it says the hardest and most time-consuming part of swing trading is to find the right stocks with the correct setup early in the trend. 3 ways VectorVest makes it easier. Number 1, the stock viewer. You can look at the stock viewer. It allows you to rank, sort, and analyze the best candidates quickly and easily. You can use the watch list viewer. I like using the watch lists because they are pre-built to display the top stocks in certain top groups. So I like looking at the S&P 500, to be honest with you, in the US. Ton of stocks, 500 stocks, very widely known companies, sorted by VST. I like going in that S&P 500 watch list and looking for trading opportunities. My preferred method, though, is to use the Unisearch tool. The Unisearch tool is a powerful search engine to pinpoint potential candidates with the right setup. So we're going to focus on the Unisearch tool, okay? And you guys are going to get these slides. I'm going to put them into the GoToMeeting control panel here in a moment. But here are the search parameters. 5-day EMA has crossed above the 8 in the past 5 days. 8-day EMA has crossed above the 13 in the past 5 days. Relative timing greater than it was 3 days ago. And we want to make sure that the stock price is above the 50-day moving average. Now, we're using 5 days here. If you want to reduce that look back, you can go 3 days, maybe 4 days if you want. We're using 5 days. It really gives us that spread, that separation, right? Because if the 5 crossed above the 8 in the past 5 days, let's say 5 days ago, right? And the 8 crossed above the 13 5 days ago, we look at that chart and we see, as of the hard right edge, the moving average is separating. That's what we want to see. Okay? I'm going to go into the VectorVest program here, and I'm in our Unisearch, I'm in my Unisearch tool, and I basically have the same parameters here. Price above the 50-day moving average, 5-day crossed above the 8, 8-day crossed above the 13, both within the last 5 days. Relative timing greater than it was 3 days ago. Average volume greater than 100,000 shares. I don't need a price minimum here, because if I go ahead and run that search as of right now, I'm gonna find stocks well above $1. If you want to add a price minimum in there, you can do that. Sorted by CI times GRT. Very good sort. Comfort index times earnings growth rate. Let's graph them. Okay? And I'm going to apply my EMA Squeeze layout. So let's just look at the hard right edge here. I'm going to take off price. 5-day EMA. I'm going to change my... No, I'll keep the color. 5-day EMA is the brown line, or the orange line. The red line is the 8-day EMA, and the blue line is the 13-day EMA, and the green line is the 50-day moving average. As of the hard right edge, do we truly see the moving averages fanning apart? I'm going to say no. I don't truly say. Now the 5 is above the 8, the 8's above the 13. I'm not seeing the fanning action yet. Guys, let's take a look back here. What about in this area here? Isn't this the same type of chart that we looked at a number of times just a few minutes ago? There's the quiet, I'll put price on. There's your quiet period. There's your squeeze. There's your separation. That's truly separation. Price above the 50-day moving average. There's my entry. Why is it not the day? Why is it not that day? Well, first off, why? Let me zoom in. Let me zoom in. Price closes above the 50-day moving average on May 28th, right? Why isn't that my trigger? Is RT trending higher? It is. Why isn't that my trigger? I don't see that's the fanning action just yet. The squeeze is just ending, and the moving averages are starting to trend higher. But I don't see the fanning action yet. Let me move forward. Okay, I'll forward. All right, there you go. There's the true fanning, isn't it? Does everybody agree that as of on June 2nd, that's when I really start to see the fanning action, right? Let me put price on. All right. Price closes above the 50-day moving average on that day. Fantastic. I got my setup. I'm going to enter the trade the following day if the price of the stock moves higher than the close of that day, $13.16. Did price move higher than the close of that day the next day? It did not. That's my entry. That's my entry. Price move, and I'll still use $13.16 as my confirmation level. I don't need to use you could use the close here. You could use 12.85 because honestly, on that day you still saw the separation. I'm going to be a little safer. I'm going to use the previous day's close as my confirmation level. Price runs above it. I enter 13.16. Maybe I get 13.25. Let's move forward. Let's just kind of step through here. When did the 5-period moving average close both below both? I don't need price on, right? I don't need price on. When did the 5-period moving average close below both the 8 and the 13? Well, the 5 started to squeeze towards the 8 here. 5 closed below the 8 on June 22nd. Look at that. Look at that. Never closed below both. Allowing me to stay in this trade, allowing me to stay in this trade. Uh-oh. Squeeze again, allowing me to stay in this trade. There's my exit at about 14 and change. There's my exit. You guys understanding the system? Everybody, you guys understanding the system? Let's just go to a 6-month chart. Let's look at the hard right edge again, because this is when I ran the search. Do we really see the fanning action? No, I don't see the fanning action. Not quite. Not quite. As of the hard right edge. I'd go to the next one. Ooh, not quite yet. Ah, beautiful. Beautiful. Isn't that a beautiful looking setup? There's your squeeze below the 50. There's your fanning action. I'm going to put price on. Price is above the 50-day moving average. I'm going to look for follow through over the next day or two. I'm going to make sure price continues to run, but this is a good setup. Okay? How about here? I don't need price on. I'm going to need another day or so. I like the beginning of the fan. I don't quite see it. I mean, it's starting. Let me zoom in so we can see it a little better. I need another day or two. I want to be really sure that the trend is going to continue. There's your squeeze. There's the beginning of your separation. I'm going to need another day or two there. Whoa, look at that one. Okay, put price on. This is a good one, guys. This is probably the best one so far. Okay, so the search, guys, gets you most of the way there, as you can see. You still got to look at the chart because it's a visual type of setup. You still want to see the separation between the moving averages. Okay, and that requires a bit of cherry picking. Okay, actually, let's go. Shoot. I really would have entered this trade probably today. Let me go back a couple days. You can argue that the moving averages here are beginning to fan on August 9th. There's no argument here that yesterday they're truly fanning. So if you really waited till the close of yesterday, you enter above 74.53 because that was the close of yesterday. Today is your entry. Okay, today is your entry. I'm going to say one thing, guys, in regards to earnings, because a couple of questions are coming in about do you buy before earnings? Do you hold through earnings? I'm going to say one thing about earnings. If you put earnings per share on the bottom of a 1-year chart and the earnings per share pattern looks like that, I have no problem holding through earnings or buying before earnings, right? Let's look at one where I probably wouldn't buy before earnings, or all of these. I have no problem holding through earnings or buying before earnings. Because look at the earnings per share pattern. What does that tell me about their recent and traditional earnings reports? Does it tell me that they miss all the time, or that they hit or exceed expectations? With an earnings per share, look at the Kohl's is a beautiful setup as well. Beautiful setup, guys. Beautiful setup. Okay, but with an earnings per share performance like this, it tells me that they meet or beat expectations more so, way more often than they don't. Okay, so that's what I would say about earnings. I would pass on this one. I don't like that earnings per share pattern. Okay, even though I might like the price setup, I don't like. Now look, I would pass on it if earnings was a week away. Okay, um, that's when I would pass on it. Okay. All right, so just some key concepts here. Let's use history to give you some confidence. Using graphs, you can visually see the best setups for entering a trade, and when you need to prepare to exit. Just to review, those are our buy rules. We want to make sure the DEW signal is up, price is above the 50-day moving average, the 5's above the 8, the 8's above the 13, those are EMAs. RT is trending higher, which we've looked at a number of times, and our sell rule, that kind of the prudent, the last line in the sand, is when the 5 EMA closes both below both the 8 and the 13. Okay? Key concepts, just to review, 5 key ways to use moving averages. We talked about that earlier. And then guys, we provided you today with a fantastic swing trading technique using multiple moving averages, and it's a complete system. We went through everything from when you should consider buying, when you should pull the trigger and buy, when you should sell. It's a complete trading system. Okay? And it's just one system. Irv says, what about stop losses? Did I say anything today, guys, about stop losses? I did not. I did not. Therefore, you don't use stop losses. It's an exit criteria. It's an exit criteria. It's not a stop loss. It's an exit criteria. So it might be a stop loss. If you enter a trade and the trade goes against you right away, and the 5 closes below both the 8 and the 13, and you're underwater, it's essentially a stop loss. So think of it more as an exit criteria as opposed to a stop loss. Okay, so that's one trading system. Guys, if you want to learn more, Stan and I are launching a course called Mastering Moving Averages. Okay, it's a course on moving averages. It's an entire course about moving averages. Okay, now the regular price for the course is $595 for you folks today, and I want to thank you guys for joining me here today. The special webinar rate is only $295. What I'm going to ask Stan to do, and I'm going to put the slides, guys, in your GoToMeeting control panel here in a moment. I'm going to ask Stan to type in that address, www.vectorvest.com/MA, in the chat box, so you guys can just simply click on it. So you get immediate access to all the modules at the time that you purchase the course. Once you purchase the course, it's in the university. All of the lessons, which I'm about to go through here in a moment, are uploaded already. They're pre-recorded lessons. I'll talk in a moment about our live mastery support sessions, because we are going to meet live. Stan and I will be doing 6 live mastery support sessions that really help you understand better the contents that were taught in the pre-recorded modules. Okay, but you'll get immediate access. The modules go through the VectorVest system. Just a little bit basics about understanding moving averages, trading with a single moving average, golden crosses, moving averages as support and resistance, the complete EMA squeeze trading. We're going to talk more about the EMA squeeze trading strategy. More techniques, more trading systems using multiple moving averages. Dr. Barbara Starr, you guys might not know, but Dr. Barbara Starr, she is a VectorVest technical analysis consultant. She's developed a system called Surfing the Reversal Waves, and she'll teach you that in that lesson. We're going to talk about the Midas Touch for both swing trading and longer term investing, because the Midas Touch system uses moving averages. And then a bonus trading system called Trading High-Low Moving Average Bands. There will be 6 live mastery class sessions. Okay, so here are some bonuses. 6 live mastery support sessions. They begin on September 1st, so we have a couple weeks. If you're a current subscriber, you will have access for 60 days to the VectorVest US Premium Real-Time Program if you don't already have it. Non-subscribers will get free access to 60 days of the VectorVest Premium program. And it also includes ProTrader searches, ProTrader, which is a technical analysis searching tool, and the auto timer as well. That helps you with back testing and portfolio management. Okay, so the ProTrader technical searches, you get full access for 60 days. That should not say April 3rd. Sorry, that's a typo. The ProTrader tool includes MACD crossovers, Bollinger Bands, stochastic support and resistance, and much more. And it allows us to create scans that find the trading techniques that we teach you guys in this course. Okay, 10 full lessons. This is a very detailed, in-depth course. 10 full lessons. Okay, all the lessons are in the VectorVest University. Okay, directions on how to access the VectorVest University are given to you once you register for the course. Okay, here are the dates for the live mastery support sessions. We begin on September 1st. That is a Wednesday, and all the sessions begin at 2 p.m. Eastern Time. Now, as you can see, there are 6 mastery support sessions. However, there are 11 lessons. We bunch a few lessons together sometimes and cover the contents of, let's say, 2 lessons in one mastery support session. Some mastery sessions cover the contents of 1 lesson. Some cover the contents of multiple lessons. All right, Rodney says this course looks really helpful. I'm in. Awesome, Rodney. If you're in, guys, just type in "I'm in" the chat box. I'd love to kind of put a name to a student. Okay. Manuel says, wow, you guys make it look so simple. It really is simple, guys. Moving averages are probably the simplest form of technical analysis there is. Okay, so here's Rob. Rob is a former student. He sent Stan an email kind of congratulating us on the course and just giving his experience. He said, thank you once again for a great presentation on the multiple moving averages. Your Mastering Moving Averages course, as always, is well documented, has a wealth of information. I really like the 20-day moving average channel search. I think the Mastering Moving Average course should be a fundamental course for new and experienced VectorVest users. It has been very educational. I look forward to using the setup searches of the program to advance my investing success. Guys, as part of the course, you will be given a number of different scans, a number of different searches that help finding the setups that we teach much easier. Now, they won't be inserted into your programs, but we've provided screenshots and we've uploaded them into the VectorVest University. All right, Warren G, not the rapper. All right, man, I'm really dating myself. Warren G was a rapper back in the 90s. I don't know if you guys know that, but anyway, after taking the MMA course, I am now able to better determine entry and exit points. My win-loss ratio following my old plan resulted in 51% winning trades with very little monetary gains. 51% is pretty good. If I would follow the 20-day moving average strategy, I would have 75% winners and produce my largest portfolio gain. Using the EMA Squeeze, I would have netted 84% winners with the second largest portfolio gain. The golden crossover would have resulted in 64% winning trades, and the smallest of the 3 portfolio gains. I would have gladly have taken half of the portfolio gains in any of those 3 strategies. All right, what I'm going to do now, guys, I really want to thank you guys for sticking with me to the end. I'm going to try to find my slides here. Let's see where I put them. I'm going to upload them into your go-to meeting control panel. Give me 1 second while I do that. There they are. Okay. In a moment, you're going to see in your handout section of your go-to meeting control panel, there it is. It says Mastering Moving Averages, and it's a PDF. You guys should see that now. Okay. I want to thank Stan. By the way, I'm going to stick around just for another minute or two, guys. I have another webcast here very, very shortly, so I gotta bounce. But there are our email address: stan.heller@vectorvest.ca, jerryd@vectorvest.com. They're in the slides. So if you have any questions about anything that we covered today, shoot us an email. Okay. By the way, that $295 rate, that is the elite rate as well. Well, the elite rate is $297.50. Which is half off the regular price, but you got, even if you're an elite subscriber, you'll have the opportunity to register for $295, and that's US dollars. Okay, And that $295 rate, guys, is only a webinar rate. It's not going to be available for a long time. Okay, it's only going to be available for a limited time here. So if you have any questions, call our number 888-658-7638. Email either Stan or myself if you have any questions about it. But we really look forward to working with you. This is a great course. I love teaching this with Stan. The mastery sessions are great. Remember, the lessons, those 10 lessons, are in the university already. So once you register for this course, you'll have immediate, pretty close to immediate access. Once you receive your welcome email with directions on how to access the course, you can go in right away and watch the lessons. You can also watch the old mastery sessions that Stan and I did back in March, I believe. Okay, because they're uploaded. Those old mastery sessions will be replaced with the new ones that we do. That's always the case. Okay, meaning 3 months from now, 4 months from now, if we do another Mastering Moving Averages course, by the way, you get access to the course for an entire year. You have access to all the modules, all the mastery sessions, all the resources in the university for an entire year. 3 months or 4 months from now, if we do another Mastering Moving Averages course, the live mastery sessions that we do then will replace the ones that we do now. You'll always get new content. You'll always get new content as it's delivered. Now, you won't be invited to the live sessions then, but you'll be able to watch them once they're recorded. Okay? Yeah, so your GoToMeeting control panel, Michael, where you're typing in questions, you should see a handout section. It says Mastering Moving Averages. It might say 1 of 5. So where you're typing in a question is your GoToMeeting control panel. That's where the slides are. Okay. All right, guys, don't forget, email us if you have any questions at all. Mike says, how much will this class help or conflict with the option paycheck? The option paychecks is an options course. This is a swing trading course about moving averages, apples and oranges. Okay, so no confliction. I don't think any of the sessions conflict either, but it's an entirely different course. Okay, so you're taking the option paycheck to learn more about options, right? You're going to take this course to help you with your swing trading portfolio, where moving averages can be the basis of your stock selection method within that portfolio. Yeah, oh yeah, you're right, Dan, too. Moving averages can help with the entries on options as well. True. But there's no confliction at all. All right. Yes, Greg is right. You can use these scans for the paycheck as well. That's absolutely correct. And Mike, I think once you take both courses, you'll understand how to kind of integrate the two. Now, you don't integrate anything that you learned in the option paycheck course in this course. It's more so using the stock selection systems that center around moving averages to help find option trades. The scans are not in VectorVest, guys. So all the scans that you will have access to that help you find the EMA Squeeze and the 20-day moving average search and the Guppy trading system, which Stan does a really good job of teaching. Those screenshots of those searches are in the university. The scans are not in your program. You have to build them, and Stan has recorded videos that are also uploaded in the university walking you through how to build those scans. Okay, but they're not inserted into your programs. All right, Mike says, cool, sounds like it will help. Absolutely. Yeah, David says, just the scans are worth more than the $295 in his opinion, he says. I agree. I agree. All right, Roger says, count me in for this course. Awesome, Roger. Look forward to working with you. Guys, got to run. If you have any questions, please email us. We look forward to working with you. We don't start, September 1st is what, 3 weeks? Yeah, 3 weeks from today. 3 weeks from today. So we have some time. And this is great too, because once you register now, you'll have 3 weeks to watch as many of the modules as you want to watch. Now with the mastery sessions, we go slow, right? We're not going to cover lesson number 9 in mastery session number 1. We're gonna start slow. Okay? We're going to start slow. Yeah, so email our support department, guys, or email Stan or I if you can't open up the PDF for whatever reason. Okay, so we start slow, but you can go in there right away and watch as many of the modules as you want. All right. All right, guys, great session today. Hope you guys learned a lot. EMA Squeeze trading system is a fantastic system. There's a lot more to come with, with the course, with the moving averages course, and we look forward to working with you. So have a great day, everybody, and we'll see everybody very soon. Take care, folks.